Hi everyone, and thank you for joining me today. I am Renzo Desbordes, Investment Director at Flying Color. As autumn settles in, we are reminded that this is a season of transition, shorter days, colder weather, and of course, the anticipation of the UK budget. Today, I want to provide you with a timely update on the UK economic outlook. In particular, we will explore a critical question. Are we at risk of falling into what some call a debt doom loop? Or are we instead caught in a persistent gloom loop? In the next few minutes, I will clarify the difference between these two scenarios and what it means for investors, businesses, and policymakers. Let's start with the question on many people's mind. Is the UK in danger of entering a debt doom loop? And what defines such a cycle? A debt doom loop is a self-reinforcing cycle. It begins with high government debt, leading into rising interest costs. As the debt servicing grows, the government needs to raise tax, which discourage private investment and, in turn, slow growth. But slower growth means less tax revenue, adding to the debt burden. And the cycle repeats with greater intensity. If left unchecked, this spiral undermines confidence and makes escape harder. Let's look at why some experts are genuinely concerned about the UK falling into a debt doom loop. First, UK government debt is now close to 100% of GDP. Second, interest rate in the UK is among the highest in the developed world. This means that the government is paying more just to serving its debt, leaving less room for investment in growth. Third, taxes are set to rise to levels not seen in a generation. Remember, higher taxes can dampen both consumer spending and business investment, further slowing the economy. Fourth, investment is already weak. Finally, growth has slowed to a mediocre pace. And this combination of high debt, high interest cost, rising taxes, low investment creates a perfect condition for a doom loop where each problem feeds the next. But is this inevitable, or is there another story to tell? Let's have a look. It is possible that the biggest challenge facing the UK economy right now isn't a dramatic crisis, but a persistent lack of confidence, a kind of national pessimism. And when the investment mood is subdued, people and businesses become cautious. This caution sets off a damaging cycle. Less optimism leads to less investment. Less investment leads to lower productivity. Lower productivity means weaker growth. And weaker growth, in turn, reinforces the lack of optimism. We see this cycle playing out today. Businesses are delaying investments, and if the mood persists, the cycle becomes self-reinforcing, deepening, in a way, the sense of gloom. Let's see what it means for us today. So, we can see that there is a deep lack of confidence in the UK economic outlook, in particular with investment expectation for the next 12 months at a record low. It's quite worrying. And when business expect little, they do little. That cautions become self-reinforcing. The result? Productivity suffer. Since the global financial crisis, productivity has grown by less than 0.5% annually, far below historic norm. Low productivity isn't the root of the problem. It's a byproduct of something deeper, a persistent pessimism, and a chronic reluctance to invest. Until confidence returns, growth will remain stuck in the gloom loop. So, if pessimism is the root of our economic gloom, what can we do about it? The good news is the gloom loop isn't destiny. It's a challenge, but one we can overcome with the right choices. Breaking out of this cycle starts with bold, coordinated action. 1. We need to boost investment, especially in infrastructure, technology, and skill. By accelerating public investment and creating incentive for private capital, we can lay the groundwork for higher productivity and stronger growth. Second, fiscal discipline is also key. Managing debt responsibly and restoring confidence in the UK finance will help create a more stable environment for both businesses and investors. Finally, we must invest in people. Upskilling the workforce and supporting regions that have fallen behind will help the UK full potential. So let me end on a note of optimism. The UK is not a country in permanent decline. The gloom loop can be broken. With credible policy and renewed confidence, the UK can move from stagnation to sustainable growth. It won't happen overnight, but the path forward is clear and the opportunity is there if we choose to take it. We have world-class institutions, a dynamic workforce, and an history of resilience and innovation. But to unlock our full potential, we need bold and decisive political action. Only after the budget is announced we will truly see the direction the UK is taking. The choice made in the coming months will matter, not just for the economy, but the future we all share. If you have any question or comment, please contact your financial advisor or reach out to us directly at Flying Color. As I have been discussing investment, I must remind you that your capital is at risk. Thank you.